Yeah, I'm losing my edge.
Great time to trade US dollar here, getting towards those lows for the last couple of years. And we've talked about this a few times here, Pete, with the cheapening US continuing. We thought it was cheap at 147 here via SFX futures, the small US dollar. And it went below 147, went below 146. And then also, just to kind of kick us while we were down, now below 145 and getting very comfortable at these historical lows.
Yeah.
And we've given the context already about how these are the lows in the last 3 or 4 years, going back to when this index started here in SFX. We have data going back to mid-2016, the lows in the US dollar in the early part of 2018, which would translate to SFX just being a couple dollars cheaper. And we're sitting here trying to buy this market, looking for bounces or putting together strategies where we're buying it and we're creating covered calls by selling puts in other markets against it. And we're doing it with this information that I've alluded to before, the fact that the amount of time we've spent below 140, 144, 43, 42, and 41, very small since 2016.
Yeah.
But here's the thing, Pete. As far as I know, the US dollar has been around prior to 2016. And so there might be some other data we want to look at. And if you take a look here at my Monet painting that I've thrown in front of you. This is nice, right? It's like a Crayola box threw up all over the screen. But what you see here is where we're at in euros, sterling, yen, Aussie, and Canada. Where we're at right here is nowhere near the highs in these currencies going back to 2004. I got some more data here. Got another decade.
And let them know what you mean by not near the highs means dollar lows. So
exactly. That's how it translates here. The fact that the highest values since 2004 for euro, yen, pound, Canada, and Aussie, much higher than where they are. Pete needs to adjust his glasses.
Well, I stood in the euro pit for 15 years.
I was going to say you were right in front of this.
I don't remember trading 160 euro. It's funny. I'd have to go back and look at that point in time.
Yeah.
The rest of these, yes, but that was I remember a lot of 140s and 145s, 148s. Wow. So I love this because it's good context. And again, that's what it is, context. It doesn't mean that the euro is really cheap because the next stop's 160.
Yes.
But it's context around where currencies can go and have gone.
Absolutely. Yeah, no, you'll see we have a nice conclusion here of how to actually trade these things. This is all just context and building because it looks like, to a lot of people, myself included, until I went in and crunched these numbers, it looks like right here, this is the British pound, that pounds are like at their highs, right? Because it's like, wow, we haven't been close to 135 and 140 for the last couple of years.
Right.
This market was above $2. Yeah. Like, we're nowhere near the highs in this pound back when Hugh Grant was dancing for Keira Knightley or whatever the hell happened in that movie. I think it came out in the early 2000s, Love Actually. And that's my, I think, fourth Love Actually reference on the week. I'm not even getting paid to promote that, but they've been above $2 here in British pound back in 2007 prior to that stock market fall in 07 and 08. And now I don't think the pound gets back to $2. I mean, Pete, what kind of odds would I have to give you to bet that the British pound in 2021 gets above $2? It would have to be like 50 to 1 odds, right?
2021? Yeah. In the next 5 years, I would say that it's 50-50.
Really?
Yeah.
Wow.
Yeah.
Okay. So either way,
currencies haven't done this in so long, but they have an elasticity that is really unique. It hasn't demonstrated itself in so long. But yeah, I would say if you give me a year, the chance is 51. If you give me 5 years, I would say that I could
even
say
odds.
You could be on either side of $2 or $1. Yes.
Interesting. Okay, so what this all translates, this is great context, getting it from this beautiful man here with me who's been trading these markets for more than the last 2 decades worth of data that I have in front of you. Now, what does it all mean? And I'm glad that you brought up this idea of like, oh, what's possible in 2021? Yeah, that's not possible in 2021, but the next 5 years, I could see it. What's nice is we don't trade for the next 5 years.
Right.
We trade for the next couple of hours. Yeah, like the next
5 hours, yes.
next 5 seconds, really. Like, and so with that in mind, when you're trading in the short term, I have no problem with buying or selling this market. I mean, I have no problem with it. We've done it. You know, we've bought the US dollar several times in the last couple of weeks, and it hasn't worked. The only thing is, and I've gotten a lot of emails about this, is if you're trading for that short term and you're not trying to take out a long-term trade on the US dollar, you have to set those hard exits for profits and losses. You just have to do it. It's not the same as selling a call in a market and rolling it out and all that kind of stuff. If you're looking to make a couple $100 trading SFX, then you can only take a couple $100 in losses. Now, that being said, Pete, if you're looking at this trade saying, oh, I'm going to hold this for a week, a couple of weeks, a couple of months, and I'm selling puts in FXE, or I'm selling puts in whatever other product, currency product that's against the dollar. And so that's why I'm selling puts and not calls against my longs there in US dollars. Then that's a different story. You know, you can roll those out, reduce cost basis, continue that trend, as I know a lot of people are holding long SFX and short puts in FXE. That I'm totally fine with if it's a longer term trade, but you got to keep this in mind for the short term, is set those exits for profits and losses, because guess what, Pete? The lows for this SFX market going back to 2004 would be 115. I crunched some numbers, and it's not a perfect value there, but the equivalent to these highs that we're seeing here in the British pound above $2, the equivalent to that is 115 in SFX on that date. So a lot of room to run in the downside. This is not one that I say, oh, price extreme in SFX, price extreme in the US dollar, I'm just holding it on forever. So that's how you trade this cheap US dollar. It's not as easy as picking up all the inventorying these long US dollar trade, Pete, and holding them for the next couple of years. Because in the next couple of years, like you said, anything can happen in these markets. So you need to set those exits on short-term trades and reduce cost basis on your long-term ones.